Good day, ladies and gentlemen, and welcome to the Q2 FY21 earnings call of NMDC. We have from NMDC side Mr. Sumit Dev, Chairman and Managing Director, and Mr. Amitav Mukherjee, Director of Finance. Thank you very much, sir, for joining this call today. And without much ado, I'll hand over the floor to you, Mr. Sumit, for your opening remarks.
Hello.
Yes, sir. Please go ahead.
Yeah. The Q2 performance has been, in fact, we have done quite well in terms of production also. NMDC production has improved in the Q2 by almost 13%. Sales have also picked up. Prices are looking better, and our margins have also improved. In fact, though not the H1 performance in terms of EBITDA margins are lower, but otherwise, if you look at spot EBITDA, our performance is much better. And going forward, I think we should be, prices look good. So obviously, PAT has also improved by 10%. So that's very significant thing. And prices definitely look better. Both international prices and domestic prices are looking upwards. Steel sales, if you look at the production of steel in the country, also has picked up. So we believe that things are very positive with regard to production. And in fact, though in spite of the exceptional weather conditions in the Baladila region, we have in the months of August, July, August, and part of September also, our production has suffered. But otherwise, in spite of that, we have improved. The production has improved, and we hope to now, once the dry season has set in, and now things are much better. So we definitely, and we have made some modifications. Some modifications have been made in the projects also. Some equipments are also in place. So I think we should be the H2 looks very positive, and we should be performing very well. Thank you.
Should we start the question and answer session?
Yes, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Amit Dixit from Edelweiss. Please go ahead.
Yeah, hi. Thanks for the opportunity. And I have a couple of questions. The first one is on the iron ore operating environment. So just wanted to understand that since there is a shortage of iron ore in Odisha, how are we planning to ramp up our sales volume, and what are we trying to do? What are we trying to do to take advantage of this situation, or is it constrained by logistics or the inability of secondary steel players to ramp up? Basically, how do we see operating landscape in Odisha? That is the first question that I have. The second one is on the residual capex of the steel plant. Last time we mentioned that in order to complete steel plant, we would be loading it with debt. So where are we on that? Thank you.
So the first question with respect to the shortage of iron ore in Odisha, obviously there because of the non-operationalization of the mines in Odisha or the delay in non-operationalization of the mines. So there is some amount of shortfall, specifically in the secondary sector of the steel manufacturing in the secondary sector. So there is some amount of shortages. But our markets basically are different from Orissa. So in fact, our customers are a little bit different. But in any case, there is a shortage, and we are ramping up production. We believe that in the S2, definitely we should be able to nullify the shortfall in the production of around 10-11%, and hopefully we intend to cross the last year's figures production. Like I told you, we have made some adjustments in our Kirandul. There's a new line which has come up in the so that will also add to the production. In fact, we are seeing the results, and hopefully we should be doing better. There is a lot of demand. Demand-wise, there is absolutely no problem. I would like to mention one thing here is that whatever demand is, the shortage of iron ore apart, there is definitely an uptick in demand of steel. So that is also driving the requirement of demand for iron ore also. So that is a very significant aspect. We are seeing steel plants ramping up their capacities, and we believe that this will continue for some time at least. And we see uptick in auto sales also. Infrastructure is going up. So there is a demand for steel, and that's how the translating into requirement of iron ore. But obviously the customers, our customers are a little bit different from customers from Odisha. In any way, so it helps us. So that is the other thing. That is one part of it. And our productions you will see a definite improvement in productions in the subsequent S2. In fact, in the month of November, we are seeing quite a substantial jump in production. So to the tune of almost 30-40% improvement in production, monthly production. So we should be doing much better. Regarding the second question, what was it exactly? What were you wanting to say?
So the second question was that last time we mentioned that regarding the steel plant, whatever capex we will be doing essentially will be through debt because
Yes. We have already taken on 500 crores in terms of an LCD. By balance amount, I think Mr. Amitabh will inform you about what is his plans for the balance amount of debts which he intends to take on.
If I may add, we actually, as CMD said, we have raised 528 crores through the NCD route. That's about a month and a half back. And we have an authorization of raising 5,000 crores. So we will be raising more, but this year we will restrict it to around 2,000 or 2,500 crores. Right now we are negotiating with the banks for the terms and conditions. In principle, approval of the banks have been received, but the detailed terms and conditions are under negotiation. It will depend on how long the negotiations last. But the idea is to leverage the steel plant to the targeted extent of 40%, which is there in the DPR of the steel plant. As close to as 40% we can get, that would be our target for leveraging the steel plant. Thank you.
Okay. Thanks. Just a brief follow-up on this. You mentioned something about 2,500 crores. I missed it. Can you please repeat it? And secondly, can you confirm that no incremental capex in steel plant would go from NMDC's coffers essentially? You will be raising debt for that.
Yes. That I can confirm, because this year after raising whatever we are spending is from the loan only. Under the interest on loan is also being capitalized under IDC interest during. So it is absolutely clear that this tranche of the loan is obviously being on the books of the steel plant. There's absolutely no doubt about that. What I said that we have an authorization from the board to borrow 500 crores, 5,000 crores. Now, we will not obviously borrow that in one tranche, because 5,000 crores will not be spending immediately. But what the outlook we have about 2,000 crores in the next one and a half years we will be spending. So that amount we will need to borrow further, and that will be added to the 500 crores. So that will be 2,500 crores that would be on my books as debt till such time the demerger is done. Is that clear?
Like Mr. Amitabh has mentioned, the entire amount will be, the entire balance capex will be through debt route only.
Okay, very clear, sir. Thanks and all the best.
Thank you. The next question is from the line of Rahul Jain from Systematics Shares and Stocks. Please go ahead.
Yes, sir. Good afternoon. Thanks for taking my call. Sir, two things. One is on the steel plant. So where are we in the divestment process or the demerger process? You said it will take 9 months. So are we on track or to do it, say, maybe mid next year or something like that?
Yeah, absolutely. We are on track. I think, again, DF will brief us on the demerger status and disinvestment process.
Right. You see, the demerger process has been initiated already, and the first stage, preliminary works are proceeding, and the appointment of the transaction advisor, the legal advisor, etc., and the valuer and the asset valuer, etc., have already been done. And these people have begun their work of cataloging the assets and other things that are required. So the preliminary work is under progress, and we would like to believe that that is on schedule as of now, because these transaction advisors, etc., are already there. They're doing their work, and it should take anything between 9 to 12 months from the date of initiation. So that is another anything between 7 to 10 months to go.
Right, sir. Thanks. And sir, also on Donimalai, so we were expected to start production in October. What is the status on that? And also, on a follow-up, see, over the last 5 years, Chhattisgarh volumes have remained in the same range, of around whatever 20 million and odd. So we were expecting some major improvement. So any progress on that?
So it's like this Donimalai mining lease, which was under discussion. What had happened was in the month of August, a high-level team had gone to Donimalai. There were discussions which were held, and the discussions were very, very positive, and people wanted to ensure that the production starts at the earliest. Now, what has happened is this would mean an amendment in the Act. So that amendment is in the process. I think it needs to go to the cabinet. A draft amendment policy has already been circulated, so it needs to go to the cabinet, and necessary approvals are required. So that will be done. I mean, so
there will be a 22% additional premium payment only for this particular mine, right? Or is it applicable to the existing mine also?
It is like this. This was an interim measure which was being discussed. So that is what is still not yet finalized. So it is an interim measure which people were discussing. Finally, the committee of secretaries and the state and the center, including the steel ministry, they will discuss, and the final figure will then be applicable to all mines which have been given under the allocation route. So it is not only NMDC, so all mines will have to pay that amount of premium.
This is mines allocated after 2015, is it like that?
Yeah. On an allocation basis. No, it would apply to all
the new Act was amended.
It will depend on the amendment which has to be done. So once the amendment is in place, then the committee decides mineral-wise and state-wise. So that's how.
So this process can take very long, right? So I mean, in the sense that we should not assume any volume for this year, or or maybe.
No. In the meantime, the discussions are on between the state and the center to ensure that the mining activity starts. So that is something which will happen before the secretaries or before the committee gives its.
So what is your positive assessment? When can you start mining?
I would think even last time also we were very positive it would start. So there's some amount of clarification which the state wanted. So that is being given. So I would think very shortly. That's what I can say at the moment.
So before the end of quarter, is that how we should look at it?
Yeah, hopefully, yeah.
Right. And sir, Chhattisgarh, because it's been like at a static number, 20 million roundabout for
Yes.
now.
For long, yes. There were 2-3 issues. One was that evacuation. Actually, we had an extended monsoons, and there was a heavy. The rainfalls were very heavy in that region. So it was very exceptional. Last 10 years rainfall, so exceeding. So that is how the production got affected in the month of July, August. But otherwise, yes, we have been doing a figure which is more or less constant, not been improving on. But then in the S2, you definitely see an improvement. There's going to be, because we have added on some equipment and then some modifications have been made. So S2, we are very hopeful. Like I said, that already we are seeing signs of improvement in this. S2, we are seeing quite substantial improvement in production. So things should be better, definitely.
Sure. Thank you so much. Thank you.
Thank you. The next question is from the line of Reena Shah from Ashika Stock Broking. Please go ahead. Reena Shah, your line is in talk mode. Please go ahead with your question.
Yeah. Can you hear me?
Yes, we can hear you.
Yes, please.
Yeah. Thank you for the opportunity and congratulations on good set of numbers. Sir, my question is, I just wanted to know what is your target production for FY21 and FY22?
You want to know what's the target production? See, target production. At this stage we are at the S2 stage we are 10% down vis-a-vis last year. So last year we landed up with a figure of 32. So definitely we will cross that figure of whatever we have done last year. So that's a definite figure at this point of time.
Okay. Any specific numbers?
Let's see going forward. I mean, right now we are looking at crossing that figure. Hello.
Yeah.
Yes.
Actually, I could not hear you.
No, what I'm saying is that definitely we will cross the last year figure of 32 million tons. That's what I'm saying. The first half we are down by 11%, but then we'll make up for it, and then we will cross that figure of 32 million tons because we are seeing improvements in the Baladila sector definitely.
Okay. And sir, where do you see pricing scenario from here onwards? Do you see further upside due to crisis which is going on?
Not in fact because of the crisis, but otherwise also we see definitely an improvement. Yes, I would think that there will be a further going forward also. We could see improvement in prices.
Okay. Any expectation on percentage terms?
Can't really guess at this point of time, but then we believe that there is scope for improvement in prices.
Okay, no problem. Thank you so much, sir. That's it from my side.
Thank you. The next question is from the line of Nishta Mukherjee from Stillmint. Please go ahead.
Thank you. Thank you for taking up my question. My question is, as you cited, there could be a chance of iron ore shortfall due to the non-operationalization of the mines in Odisha, the auction mines. Do you see a room for imports in India?
There is some amount of imports because of the shortfall, and there have been, non-NMDC customers. Yes, there have been people who have who could probably be importing probably in the west coast. There could be some, but then prices of iron ore are also quite high at this point of time. I don't know, must be around 119, 120. So prices are very high. In fact, comparatively, domestic prices are not are much more competitive. So yes, but then there is a shortage. So obviously, I would believe that there could be some amount of import, probably concentrates, pellets.
Right. All right. Thank you.
Thank you. The next question is from the line of Arpit Ranka from Covil Investments. Please go ahead.
Yeah, hi. Thanks for the opportunity. 2 questions from my end. To start with, RINL is one of our key customers. Recently, there were news reports about their subsidiary, ONDC, starting operation. which has a annual production capacity of about 4 million tons. What is our assessment of that supply starting and having potential impact on our supplies to RINL in the next year or so? Whatever your take on that.
The OMTC mines of RINL still some time. It should take some more time. That's my assessment. And a very small mine, 4 million tons. So not an issue at this point of time. And in fact, RINL is underperforming at this point of time. Their capacities are 7 million ton capacity. They are hardly doing 3.5, 4. So at this rate, they will not be able to do the entire. They will not be able to reach that 6.3 or 7 million tons. So there's a lot of scope. I think we are not really very concerned about RINL's capacity. And then we have alternative customers also, and there's substantial demand. We do not see any issues in the next couple of years at least.
Okay. No, that's helpful. And also, 2 years ago, there were some news reports about NMDC trying to acquire litigated mines of OMDC, BPMEL. Is it something that you're actively been looking at, or that there were just rumors with no substance to it?
No, we are not looking at any OMDC mines at the moment.
Okay, great. And one just follow-up. I mean, because of COVID, public hearing and all those things that kind of were not possible, and ECFC and issue of those were kind of the timelines had kind of gotten extended. What is on the ground situation as per your assessment of that? Has it been streamlined again, or do you see that the impact of COVID is still kind of hampering any progress on that front for any miners?
You are specifically talking about Odisha?
Yes, Odisha, yes.
Okay. So Odisha, definitely there is an effect of COVID. All miners are suffering. Everybody has suffered in this period, specifically in the Q1. But things are now better, especially the people who have taken up these mines. But then we got to also understand that most of the mines have been, the major capacities have been taken by the captive miners. So that is not going to be available. So that amount of ore is not going to be available to the people, to the steel manufacturers or the secondary sector. Basically, the secondary sector is affected because of that. So that is one thing. The other thing is that things are improving now. Production is slowly ramping up, and going forward, I think in a couple of months things should be much better in Odisha. Though there have been some stockpiles, but then what has happened is that there have been a lot of exports of pellets and iron ore, the lower grades. So that is why the issue has been, it's got magnified, the shortages. A lot of exports of pellets and iron ore have taken place. Specifically the stockpiles which are still available with the existing miners. So
okay. No, so what I was trying to understand, sir, is given the shortages, which is like everybody is aware of it and everybody is trying to find solutions around it, is the ministry and the government trying to expedite the process of issuing ECFCs which are pending and public hearing, which is a key component of that? Is this again back to normal, or there are still kind of hurdles in getting?
Yeah, I do not think with the existing miners, with the mines which have been auctioned, I don't think the ECFC problem exists, because that has been carried on to the existing ECFCs. Approvals are already going to the new miners, so that is not a major issue. I do not think that would be a major issue. I think the real activity of mining would be ramping up of production would be.
Fair enough.
Of course, the government is seized of the situation, and people, whether the state government, because that's a major loss of revenue. So the government, whether the central ministry or the government of Odisha, they are seized of the situation, and they are persuading the people to actually ramp up the production. So things should improve in the next couple of months. Things should be much better.
No, that's helpful, sir. Thank you. I'll join back in this. Thank you.
Thank you. The next question is from the line of Kamlesh Bagmar from Prabhudas Lilladher. Please go ahead.
Yeah, sir. Thanks for the opportunity. Sir, just one question on the part of this lease renewal premium. So where it is stuck? So would it require the government to come out with a like say alteration in the act, or it will be required by the one certain ministry. So what would be the modalities for that? So would there be a change required in the entire act, or it would be by a simple, like say, just from the approval from the state government or all that?
Yeah, talking about Donimalai, na? So it's like this. It's like this that post 2015, there is a provision for application of premium. So that doesn't exist with mines which have been allocated pre the 2015. So there obviously it needs, if you need to apply any premium, you need to make an amendment in that and the process of determining the premium. This is for mines which are allocated under the allocation category. So obviously there is going to be a amendment in that. But then in principle it has been agreed that whatever happens, the amendment or whatever changes in the act that will take place, that the central ministry will take care of that. However, in principle, the state has agreed that production can start, and whenever the premiums are announced, they will apply.
So, but similar demands can be made by the Chhattisgarh government as well.
So what happens is that this is an amendment in that, and all miners falling under this allocation route. So we will have to pay that whatever is decided by the government. So that's not it is a general rule which will apply for everybody in the country.
So just one clarification needed, sir. So would it be applicable for Chhattisgarh mine or not?
Like I said, it is going to apply to every mineral. It is not only to iron ore. It is going to, under the allocation route, it is going to apply to every mineral, every state. So it is nothing very which is only going to be not only going to be Donimalai per se, or in Karnataka, or in iron ore. It's going to apply to all minerals which have been awarded on this allocation route. That's what is my thought on.
Okay. Thanks, sir. Thanks a lot.
Thank you. The next question is from the line of Prayatna Mahajan from Kotak. Please go ahead.
Good afternoon, sir. This is Mangal from Kotak. A couple of questions. The first, again, on the Donimalai mine, our understanding was that a provisional duty of 22.5 have been agreed, and the mine can start very soon in August end. But since last 2.5 months, we've not seen any progress. So while we are waiting for the amendment, what is a restart basically waiting for? Is it some kind of approval or formality pending?
Yes. There is some sort of a formality, because this is a matter which needs to be sorted out between the state and the center. So that once that is done, and the NMDC then gets informed, they inform us that we can start our mining process. Because ultimately the state is the owner of the mineral, so they will have to intimate us. And once they tell us that you can start mining, we'll go ahead.
Understood. And just to on the Chhattisgarh mine, you said that it will be applicable to all the mines. Our renewal has been done from April 2020 onwards. So can we expect, since it's the second renewal, or it's the first renewal, this amendment will be applicable to all the PSU mines of first renewal onwards. So we might have a retrospective charge on whatever we have produced in FY21 at whatever royalty has been decided, say 22% on the revenue. Is that the fair assessment?
No, I have my own reservations. See, one thing is for sure, that retrospective effect to a thing is not it is not applicable. There cannot be anything retrospectively. Probably it can be things could be prospective, but retrospective effect to a act is not possible. That's what our understanding is.
Okay, but then we need not wait for the next renewal, right? It will be applicable for this renewal itself.
Yes. Yeah, applicable for this renewal, but whether it is, the fact that you are mentioning, what you would like to mention is that it is going to be applicable retrospectively. So I do not think that is going to be applied. to apply retrospectively. I think, yeah, Amitabh, if you have anything to say on this, you can mention.
You see, ideally we would like it not to be applicable at all. At the worst case, we'd like to be applicable prospectively. But whether it is prospective or retrospective will depend on the amendment of the ordinance or the amendment to the Act. So it is very difficult for us to speculate. Your guess is as good as mine. But we'll hope that since we have already produced for about a year now, by the time the year comes in, and since we'll not be in a position to recoup it, so I think let us hope. We would like to hope that on account of natural justice, that will not be on retrospective effect. But the actual thing is that we cannot preempt. We do not know what the government will actually notify. So we'll have to wait for that. But let us hope that it will be only with prospective effect.
Understand. And the Kumaraswamy mine is also getting, the lease is expiring next year. So eventually we can assume whatever is the new duty which is notified, the entire company will move from, say, currently 20% odd royalty to, say, if it is 22.5, so say 40-43% royalty. That's the proper understanding?
15%. Currently it's 15%, but whatever gets notified, we have to pay for Kumaraswamy also, yeah.
Okay. And so when this announcement had come August end, it had a very specific timeline. I think the minister had said 3 months. So is the timeline still you feel will be honored? Sometime in November end, we will get to know what the revised amendment and the royalty is?
Looks like that the 3 months period doesn't appear to be very, not very hopeful, but then something should happen. I can't say about the timelines. Of course, it was said that it would be done in 3 months, but right now, the way it is, not looking at 3 months, probably it should take some more time.
Understood. So one question on the steel plant. So what sort of, post the demerger, what sort of divestment is planned? Is it like creating a mirror image where government will own, say, 70%, 30% will be similar minority as what we have, or we are looking for a strategic buyer?
Right now, it's a demerger thing is a mirror image of this company, and then the government diversifies its own stake.
Thank you. Mr. Mahajan, may we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Thank you. The next question is from the line of Vinit Malu from Aditya Birla Sun Life AMC. Please go ahead.
Yeah, thank you. Good afternoon, sir. So I just wanted some clarity on, what are the levies that you're currently paying in Karnataka? So I understand there's 15% royalty, there is DMF, there's some surcharges, etc. on these two. Then there's a 10% amount which is being collected on behalf of the Empowered Committee. So can you just highlight what other levies are there, major that I might be missing in this?
Yes, you can take that.
Yeah. As you rightly said, that the royalty is 15%. And on that 15%, there's a DMF and NMDC at the rate of 30% on 15%, and 2% on 15%. So these are the levies. Now, when this money, unfortunately, in Karnataka does not flow into our bank accounts from the customer, it goes to the monitoring committee. And then monitoring committee retains 10% for R&R works and temporarily retains another 10% for SPV. So that we are supposed to be due as soon as the Supreme Court grants us the refund. We will get around 2,200 crores straight back from the monitoring committee. That is on account of R&R that is being retained, and for SPV that they are taking 10%. So this is the current scenario. Regarding the monitoring committee's due, you will find it in the books of account. Although we charge off both this 10% of SPV and 10% of for RNR in our books. We take that as an expected credit loss.
Understood. Okay. Sir, versus this, does a captive user also has to pay this 10% amount or not at all?
No, all miners in Karnataka have to pay.
In Karnataka.
That SPV part, at least everybody is paying.
Sorry, only the first 10%.
Yeah.
Yes, because for all other mines, you see there were two parallel cases in the Supreme Court. One for us, NMDC, which was granted the first go ahead for mining after the ban, that is after 3 or 4 days of the ban, and there is another for all the other private miners. Now, for a customer who buys from a private miner, he pays directly 90% to the seller, not to the monitoring committee, and 10% he pays to the monitoring committee. But in our case, the 100% receipt is being is through monitoring committee, because although we have mentioned it many times in the Supreme Court, we have not been able to get a date to hear it. We are hoping in 1 or 2 hearings we will get the refund, and like other once that Supreme Court hearing is done, then like any other customer in Karnataka, the customer will give me directly 90% of the sale proceeds and give 10% of the sale proceeds to the monitoring committee, like any other person.
Okay.
Understood.
Okay. So this is part of the base price that we have, right? And royalty is on top of this.
Yes.
100 rupees I sell it. 120 rupees is the actual cash inflow to the monitoring committee. Of that around 115 would be going to the royalty. 80 is paid to NMDC, 10 is retained, and 10 is appropriated. This is the matter.
Okay. So in effect, there's actually royalty on these two 10% charges also.
No. Yeah. Obviously.
Yeah. Okay. Understood. And sir, so same would hold true for any other, like GST, etc., all those things, right?
Yeah.
Okay. Understood. Yeah. Thank you so much, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Dhaval Doshi from Pinpoint AMC. Please go ahead.
Hello, sir. Sir, just want to ask one question. With regards to this, the rate that we're talking about for the Donimalai mine, is the government planning this for all mines on an allocation basis after the NMDR amendment, or the older ones as well?
Yeah, all mines which have been given on allocation.
But is that after the MMDR amendment or prior to that as well?
So there has to be some sort of an amendment in the Act to make provision for this. So once that amendment comes in, it will be applicable for all mines to be given on allocation.
Sir, you didn't get my question. Say, for example, there are other miners who were owning this mine since, or who've been allocated those mines for more than 10 years. Even those will be applicable.
In fact, that is what I am saying. In fact, the post 2015, the pre 2015 also. So that would mean the mines which are falling into the category which you are pointing out. Yes.
And that will be on renewal or from today?
No, that will have to be seen now how the amendment comes out. But I would believe it would apply to everybody whenever that comes out.
No, sir. No one is trying to discuss that. We're just trying to understand what are the counters of this.
See, I wouldn't know what specifically would be there. I mean, whether it's applicable on renewal or it would apply from day one. So that has to be seen. I just can't speculate on that.
Okay. Cool. Thank you. Thanks a lot, sir.
Thank you. The next question is from the line of Mohit Bansali from Bonanza Portfolio Limited. Please go ahead.
Hello, sir. Can you hear me?
Yes.
We can hear you.
Yeah. So thanks for the opportunity. I just want to know that in international market, the prices has gone up and they are almost 7 years high. So are we also planning to increase in tandem with that, or our price will be, I think there is a differential of around 30-40%. What is your take on this, sir? Thank you so much.
No, we are increasing prices whenever we see an opportunity, and since our markets our target markets are generally the steel plant, domestic manufacturers. So we accordingly have a pricing strategy which focuses basically on the domestic sector. So obviously we also look at the import parity also. That's also one factor which is also under consideration whenever we take a call on prices. But primarily on the domestic scenario, our prices are based on the domestic scenario, and we see a uptick in prices, and definitely we will the opportunity, whenever there's an opportunity, we'll take it up. And prices, yes, we see improvement in prices going forward also.
Okay, sir. What is the differential right now if we see the international price right now, seeing domestic prices? I mean, what will be the differential right now?
Should be around 25-30%. Yes. Any idea? Landed cost?
Landed cost on eastern coast would be at least 45-50% lower than the international price of the imported ore at Vizag.
Okay, 40-55%. That is quite high. Okay, sir. I got the point. Thank you so much. Thank you, sir.
Yes, please.
Thank you. The next question is from the line of Pinakin Parekh from JP Morgan. Please go ahead.
Yeah, thank you very much, sir. So just there is a bit of a confusion. So now trying to take a step back. In 2014, the government of India last revised royalty rates across India's mineral base. And since then, for the last 6 years, there have been no renewal. There have been no revisions of the royalty rates. Since then, coal and iron ore blocks have been auctioned. And you had a situation where you had the existing mining leases had a sunset clause in terms of captive mining. And after that, they were supposed to come up for auction. Now, when you're saying that an amendment is being considered by the government of India for all the non-auctioned minerals, it is for a revision of the royalty rates, or is it imposing a one-time fee which needs to be paid to the respective state governments to mine the ore?
I think you didn't get the point. The point is, first thing, it applies to mines which have been given through the allocation route. That's number one.
Mm-hmm.
So it applies to only mines which have been through this process, whichever are the mines which have been given. So it will apply only to those miners. So there is no question of given to non-auction or captive or everybody. So mines which have been given on through the allocation route, only it will apply for them. And it will be based on some sort of because obviously right now there is no provision through which any premium on the, it's not a change in the royalty rates. It's basically trying to charge some premium on the selling price. So that sort of, and there is post the 2015, there already exists a provision in the Act for the states probably to charge a sort of premium. So but then this doesn't this provision is not there for mines which have been pre-2015. So for them also this will apply. So that act
this will apply only, sir, to the public sector miners, or will it apply to the private sector miners who have mines before 2015 but were not through the auction route?
I am not aware of this particular thing, whether it's only public sector or private sector. Any mines which have been probably there could be some mines. I am not aware of that. Probably
sure, sir. And sir, there is a concurrent revision of the royalty regime as well that is being thought about by the government, or is it only related right now to renewal of mining leases where there needs to be a premium needs to be paid?
No, there is no royalty revisions. I don't think
there's no royalty revision. Understood. And lastly, sir, as you mentioned, that if it is retrospective, basically it would mean that any allocated mine lease since 2015 which got renewed but did not have this clause, all those miners would also have to pay, and which is why a retrospective amendment looks that much more difficult. Would that be a fair assumption?
I also think, but it's a matter of speculation only. What the government actually intends to do we'll see when it appears, actually.
Understood, sir. And at this point of time, there is no clarity in terms of timelines.
If I may be allowed to add with what CMD said, we have never committed that this will be retrospective. We have said that it may be retrospective, it might not be retrospective. It is a decision that the government will take. Neither of us have committed that this is a retrospective implication, because we do not know the government's mind. So it is just a clarification.
Sure, sir. Last clarification. Whatever decision the government of India takes is not NMDC specific. That decision will apply to every other miner who basically falls under the same bucket.
Absolutely.
Obviously.
And it is not only limited to a specific mineral. It will be applied. It would apply to all minerals.
Understood. Thank you very much, sir.
Thank you. The next question is from the line of Ayush Agarwal from Value Investing Funds. Please go ahead.
Thank you for the opportunity, sir. Most of my questions have been answered, which is around the mine premium. A follow-up on that query would be, since now the mining premium will be implemented and whatever increase there is, can we see a structural change in iron ore prices across India, since NMDC is a trendsetter and a price setter in India? So can that happen going ahead? And one of the comments from the interviews was that it would be difficult to pass on the premium that would be applicable. So can we see a structural change in long-term iron ore pricing going ahead?
Yes, I would think definitely it is going to affect the prices going forward once it comes into effect. We have seen premiums in iron ore mines in the auction process also, and now with this, definitely we would see an increase in prices.
Yeah, right. Because even in the e-auctions, the mines have gone at a high premium from what one would imagine.
And my second question is going to go up.
Yeah, right. And my second question is, sir, now that big players like JSW and other steel plants have their own captive mines. And JSW and these big players form a huge part of our revenue. How do we plan to de-risk this when they start mining from their own mines?
See, firstly, if you look at particularly the bigger players in the steel industry, everybody is ramping up production. I mean, everybody is increasing production, whether it is JSW or whether it is SR or the other big players. Everybody is increasing their production, and if you look at the growth plans of any one of these companies, even JSW, and they are talking of going forward, whether it's in Dolvi or whether it is in Tornagalu, their production is going to go up. And they have taken up mines in Karnataka, and they have mines in Odisha also. So, I mean, one is ramping up the production from these mines and then sending them to these particular locations where they have units. So we don't believe that. We don't believe that there's going to be any shortfall in terms of. I mean, we would not fall short of, because we are very secure in terms of our customer base, and we think that there is provision. I mean, our long-term plans up to 50 million tons, and then again further to 67 million tons. We don't see any, problems in selling this material.
Great. Well, that's it from my side. Thank you.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Sir, I'm a bit confused. To my understanding, there are two elements. One is royalty and one is premiums. Sir, can you please explain which is a state subject and which is a central subject? Sir, if you can just help correct my basics, that will be quite useful.
both are, what is that you want to know? And both the figures, both amount, revenues, everything goes to the state only.
Correct. But sir, typically when we see royalty changes or premium changes, is it that the center dictates it and after that the state approves it? How does the mechanism work?
No, the central ministry only makes the rules. The central ministry makes the rules, and the application of that is with the state. When the state implements those, so there's nothing. The state has got nothing to do with the rules. The rules are made by the center, Ministry of Mines.
Correct. But sir, in the specific case of Donamalai, which was subject to, it came out because of the renewal thing, it is that the state government came upfront and they asked for a higher premium. So how should one look at this? The reason I'm asking is it say something like next we have mines in Chhattisgarh, that is also something which will face same music, or once this recommendation amendment comes from the center, it will put at rest all the concerns regarding royalty or premium increase for the next 3 years or 5 years. Sir, how should one understand this?
No, they should see. Obviously, states have an issue. States have been demanding a premium. This has been basically because they have got premiums in the auctions. So that is that is why they have been asking for premiums in the from the mines which have been given through the allocation route. So that was something which they had taken up, and that was what they had taken up with the center, and that is what where this amendment or change in the act is coming from.
Thank you, Mr. Shah. May we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Vinit Malu from Aditya Birla Sun Life AMC. Please go ahead.
Yeah, thank you. So just as a follow-up, just need to clarify. So you said that, out of 100 rupees, roughly 80 rupees comes to NMDC, and rest everything goes to, either state government or the, monitoring committee, etc., right? So basically you are already giving a 40, sorry, please correct me where I am wrong.
120 is the collection from government. My notified price is 100 rupees. 120 I collect from the customer. 15 rupees is paid as royalty. 3 rupees as 3.5 or so 4 rupees as DMF, and 1.5 rupees as annuity. So 20 rupees goes to the government, as state government as levy. That leaves 100. 10% is appropriated to SPV. 10% is retained as a temporary measure. And out of 120 rupees collected against 100 rupees of notified price, I get a cash flow of 80 rupees.
Right. And this, and sir, this 10 plus 10% which is collected, what is the specific use of this amount?
The SPV is for local area development, and R&R is just a retention money which will be paid back to us. The current dues against that is around 2,300 crores.
Right. When you say local area development and the DMF, sir, what is the difference between the purpose of these two?
So the DMF is also for the development, local area development. The R&R which we are paying was for specific projects which had to be implemented in our mines, in the mine area.
Correct.
So, for example, some environmental measures, for some action needed, some civil construction to prevent pollution measures. So all that specific things which were supposed to be done in that R&R part, specifically with regard to environmental and environment concerns.
So R&R I have understood, sir, the purpose. I am talking about the other 10% which you highlighted is for local area development, which is same purpose as the DMF.
The SPV.
Yeah, SPV.
That
yeah.
is a directive specific to Karnataka. That is as per Supreme Court directive specific to Karnataka, where all the miners, irrespective whether they are in public sector, private sector or captive, they pay this 10% as SPV, special purpose vehicle, which has a mandate from the Supreme Court specifically for Karnataka in the regions of Bellary and Chitraduರ್ga.
Okay. So, sir, just broadly understanding, out of 120 rupees, you are realizing 80 rupees net currently, right? So, almost, on your net realization, X mines basis, roughly 50% is going to various authorities in form of different levies and detentions, right? And if this premium comes in, which is 150% of royalty, roughly 22.5 rupees further, so this amount of 50% on your X mine realization virtually will go up to something like 75 or 80%. That is what will be retained by various authorities or retained by various, right? And NMDC will only get 25% of what is being realized on the customer.
Another 22 rupees will go. So 100 में से 20 rupees has gone already to 10 rupees as SPV and 10 rupees for retention, 80 rupees. 80 rupees minus 22 rupees is around 58 rupees. 58
Precisely
rupees
my point, sir. Out of 120, you're realizing only 58. Basically, let's say you're realizing only 60.
I haven't finished. So 58 is what I get a cash. 10 rupees is what I get on a delayed transfer. So I get 68.5 or 70 rupees. My cash flow is there.
Yeah. Okay. When that R&R extra money is released, right? I mean, I'm talking as of now because you're providing in a P&L for that right now.
No. Exactly. But what happens is that what we are telling so there was this particular activity which was to be completed for this R&R thing, and this is what we have already completed, and we have told state that these are the we are going to the monitoring committee and the Supreme Court and telling them that these are the activities which were told to us, which were supposed to be done, and we have done this. So now it needs to be stopped and the amount refunded to us. So that is what we. So now, since it is the Supreme Court is the sole. They are monitoring this whole thing. So we need to go back to the Supreme Court. So once we tell the Supreme Court, I think the amount will be released.
So just last question from my side. When was the last hearing on this matter in the court, and when is the next hearing due, if at all?
I don't have exactly the dates, but
February 20. But because of COVID, then we have been asking for a hearing for a long time, for the last 2 years, at least 2-3 years. But it was finally scheduled in February 20, but I think because of COVID, that got delayed.
Okay. Sure. Right. Thank you very much, sir. Yeah, really appreciate your answer.
Thank you. The next question is from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Good afternoon, sir. Just a continuation of previous question, since there is a lot of confusion on this. After this premium of 22.5, which would be implemented, you will be adding to the notified price and will try to pass it on to the customer wherever possible, right? Or what's your view on the same? Because there are different grades of the ore, particularly in Karnataka and Chhattisgarh, which you sell, and it is not every time possible for a steel player to keep on importing ore. So as of now, royalty and other levies like DMF, you have been adding over notified price and passing it on to customer. So how would premium change your billing pattern?
So it is not exactly a pass-through. This whatever figure will be finally decided or will by the committee. So it's not going to be a pass-through, definitely. But then obviously we're going to have an impact on the prices.
Okay, so you are saying suppose assume 22.5% premium is chargeable, you will have to adjust your notified prices which goes for e-auction, and this premium is actually payable by you, and customer doesn't get it in its billing, right?
That's what I said. No, it's not going to be a pass-through.
Okay. And just on the earlier rounds of question which I was confused, your entire Chhattisgarh ore would come under this if implemented, or only few mines would come under it?
It's an amendment that applies to everybody in the country.
Okay. And when is the next meeting for the same, or something, or any cabinet note or expected? Any timelines for this? And does your Doni Malai production restart depends upon final amendment coming in?
No, it doesn't depend on the final amendment coming in. That's what is the understanding. It will happen before that, and subsequently can't really comment on when it is actually the committee will sit and decide, or when the act will be amended, because that's a government's decision. But then definitely the mines can start off before that.
Okay, so any timelines when you plan to start Doni Malai mine?
No, it doesn't depend on us. No, it's the state government which has to give us a clearance to start the mine. So we'll have to look at the state government for resuming operations.
Okay. Thank you. Yeah.
Thank you. Ladies and gentlemen, please limit your questions to one per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Hello. Hi. Thank you for the opportunity. Just a clarification on the previous question, first of all. Would this apply to, I think you partly answered this, but just want a clarification. Would this apply to deposit 4 also if it is a captive for the steel plant?
No, deposit 4 is not a captive for the steel plant.
Any captive mine that you have for the steel, for your internal steel plant, would that also be these higher royalties be applicable to those also?
You are asking whether the royalties go to applicable for those, huh? That's what you're asking?
Yes.
What royalty? Yeah, the royalty does apply to all the 15% royalty rate of 15%, so it applies to all miners in the country.
Okay. Secondly, on the product portfolio, you mentioned RINL is also may possibly look at sourcing some iron ore from OMDC. JSW may also at least in the next couple of years source most of the iron ore from its captive mine. So NMDC has been selling about 2 million tons to Dolvi. As you look at your customer mix over the next couple of years, would you be looking to shift some of these to secondary producer, Chhattisgarh players? How do you look at your customer mix for the next couple of years?
See, what happens is, obviously there's going to, because somebody has taken a captive mine, so he's going to ensure that he sources his raw material from those mines. So that is obviously something, and that is why he has paid a premium. They have paid a premium for taking those mines. So that's not the issue. But then the point is whether that is sufficient for their production or for their to suffice their requirement, or they would require more. Obviously, these people are also ramping up production. These capacities are going up. Steel plants capacities are going up, and we will need to then we have the Nagarnar steel plant, which is also coming up, which will also have a requirement of iron ore. And there are other players, so we don't foresee any shortage of shortfall in terms of selling our iron ore.
Thank you, Mr. Jain. May we request that you return to the question queue for follow-up questions. The next question is from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Good afternoon, sir. So just want a clarification on whether we've spent anything incremental on the steel plant in the first half, because as per the annual report, I guess we've spent about 17,000 crores so far. So has there been any incremental spend in the first half of this year on the steel plant?
Pardon? You are asking whether there has been any incremental capex?
Yes, sir, because of the annual report, I think mentioned a figure of 17,000 crores that you spent till March. So in the first half of this year, have you spent anything more?
DF, you take the question.
Till date, we have 17,186 crores on capex and steel plant.
That is till September, sir?
Up till September, 39. Up to 39, it is 17,186 crores.
And incrementally now we won't spend anything more from our balance sheet. Whatever it will be mostly debt funded.
Beg your pardon?
So incrementally, suppose, we require about 5,000-6,000 crores more to complete the plan. So none of
the spending, everything, we should be, after commissioning, the entire steel plant should cost me around 21,500 to 22,000 crores.
And none of this will be from NMDC's balance sheet, right? So that will be like leveraged.
The further investment are leveraged through debt. No more equity.
Thank you, Mr. Agarwal. May we request that you return to the question queue for follow-up questions. The next question is from the line of Gaurav Rateria from Morgan Stanley. Please go ahead.
Hi. Thank you for taking my question, sir. So, two questions. Firstly, is this buyback in lieu of dividend? Is that one should read it like that?
No, no, it is not that.
So dividend will be over and above the buyback.
Can't really say at this point in time, Mr. Mukherjee. You would like to add there? Hello.
Yeah.
Mr. Mukherjee.
That is for the board to decide, so we cannot anticipate what the board will decide. So we cannot make a public statement whether and how much, and if at all dividend will be paid or not paid. This cannot be speculated or anticipated.
Okay. So second question, assuming that MMDR amendment happens not on retrospective basis but only on prospective basis, will this be applicable to Chhattisgarh mines from day one or only when the next renewal comes for those mines?
We will have to look at that the changes which are made. I can't really comment or speculate on what is going to come, whether it's going to be retrospective or prospective. Generally, these are all prospective, but then I can't really comment at this point of time.
Thank you, Mr. Rateria. May we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yes, sir. Thank you for the opportunity. Sir, in your opening remarks, you did articulated that the volumes are going to move up by 30 to 40% from this month itself, sir. So, sir, where is this bump up going to come from the production side, sir?
Yeah, basically it's going to come from Baladila sector. We expect volumes to go up from Baladila. And hopefully if Doni Malai comes online then.
Thank you, Mr. Kapoor. May we request that you return to the question queue for follow-up questions. The next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Hello.
Yes, please go ahead with your question, Mr. Singh.
Yeah. Sir, I just want to understand, once Doni Malai 6 million ton per annum would come in, we have also increased our Kumaraswamy to 10 million ton. So do we have sufficient evacuation capacities in Karnataka for the entire 16 million tons, or we have to, juggle in between Doni Malai and Kumaraswamy for the time being?
No, we don't have to do. I mean, earlier also when Doni Malai was there, both were at 6 plus 6, 12 million tons. So both were doing well. And then now Doni Malai, Kumaraswamy is going from 7 to 10. And here we are 6. So there is no issue in terms of selling the material. The demand exists in Karnataka for these volumes.
Okay, sir. So evacuation is also there for entire 16 million ton already in place.
Yes. The evacuation is not an issue.
Thank you.
Thank you. The next question is from the line of Tejas Pradhan from Citigroup. Please go ahead.
My question has been answered already.
Thank you. The next question is from the line of Ashish from DAM Capital. Please go ahead.
Yeah, hi. Good evening, sir. So my question is on the clarification on this premium paid amendment in NMDR Act. So will it be applicable for captive mines also, which are under allocation route?
No, I said this before. The mines which have been given through the allocation route, only for those mines.
Yeah, so if it's for captive purpose and given under the allocation route, it will be applicable to that also.
Exactly, I can't speculate on that, but yeah, should be.
Okay. And then secondly, what's our revised estimated timeline for setting up a steel plant and Kumaraswamy from 7 to 10 million tons?
So Kumaraswamy 7 to 10 should take us another 6 to 7 months, 6 months at least. Regarding the steel plant, next year, July, that's what, mid of next year is what we are planning.
Mid of calendar year
next year.
Because earlier you were saying that export has to come by October 2010. So still we are maintaining the same timeline.
It's moved to mid of next calendar year.
Okay. Yeah. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, we will take that as the last question. I now hand the conference over to the management for closing comments.
Thank you. It was nice answering all your queries regarding and the sort of information which was the questions with regard to NMDC. It's always a pleasure to be answering these queries, and obviously NMDC is looking forward to improving production and enhancing stakeholder value. Thank you so much.